Hey, welcome back. Corelogic just announced their latest housing market forecast over the next 12 months. They also provide the top 5 markets in which they believe home prices will decrease the most over the next 12 months as well. And also something new they added, they actually provided some metros they believe are overvalued right now. I'll share those metros here in a little bit. But let's go ahead and dive right in. I have a lot to share. I first want to talk about what happened over the past 12 months. This, by the way, was posted by Corelogic one day ago on May 7th. It says home prices nationwide, including distressed home sales, which of course are foreclosures and short sales, increased year over year by 5.3% in March 2024 compared to the same time frame 12 months ago. Also, on a month-to-month basis, home prices grew by 1.2% in March compared to February. Now, here's the report from 1 year ago, because I want to look at what was our forecast 1 year ago. How's that compared to this 5.5% growth rate we're seeing right now? And 1 year ago, the forecast was at 4.6%. So a little bit lower than the actual reading at 5.3%. Something I noted as well when looking at this report compared to the report from 1 year ago is that home prices have increased by 5.3% from 12 months ago, again, increased by 1.2% month to month. So this is a little bit different compared to a year ago. So 1 year ago, posted on May 2nd, 2023, home prices overall increased by 3.1%, whereas this March, it increased by 5.3%. Also, this 1.6% month-to-month gain is actually higher than the reading right now at 1.2%. All right, let's now talk about their forecast over the next 12 months. It says their forecast indicates that home prices will rise by 0.8% from March 2024 to next month, and increase by 3.7% on a year-over-year basis through March of 2025, which is this right here. Forecast over the next 12 months, increasing by 3.7%, a small increase of 0.8% month to month. I also looked at their forecast from 1 month ago. They were forecasting for a gain of 3.1%. So now they actually upgraded that to 3.7% right now. This, by the way, is more or less in line with long-term averages. Home prices tend to increase in the range of 3 to about 6% overall in the long term. So at 3.7, that's more or less in line with historical norms. However, this is still lower than the previous increase over the past 1 year, up by 5.3%. Also, year-over-year home price gains for the month of March have remained above 5% for the past 5 consecutive months. And on top of that, they're projected to stay that way over the next 12 months. Northeastern states have posted the biggest gains on a national average, which has exactly been important to you guys, because in the Northeast and some parts of the Midwest, we're seeing the biggest increases in home prices, whereas other areas such as Florida and Texas, which are experiencing big gains of inventory, are not experiencing the biggest increases in prices overall. It says northeastern states continue to post the nation's largest gains as more Americans migrate to bedroom communities of major cities and joined job hubs, as well as areas where household incomes are relatively higher and can sustain the elevated cost of homeownership. We basically have multi-decade lows of housing affordability due to the increase in rates and home prices. So they're saying here that more people are moving to these areas due to the job opportunities that some people have. In addition, the inventory gains that we're seeing in states like Florida and Texas still lag compared to the Northeast. That's exactly what Resi Club posted as well about a week ago. I made a separate video about this, but overall, when looking at the US regarding the amount of houses for sale of existing houses compared to 1 year ago, back in April 2023, we're seeing the biggest increases actually in Florida, Texas, as well as Arizona. Arizona is up by 45%, Texas is up by 38%, and Florida up a whopping 64%. There's 64% more houses for sale compared to 1 year ago. Much different compared to Nevada, down by 12%. And also these northeastern metros, or northeastern states, I should say, Maine only up by 29%, whereas New York is down by 1.1%. What else do we have here? Connecticut is also down by 1% as well. Massachusetts only up by 7.1%. Also, some Midwest states up only by 2.6% in Illinois, up by 22% in Wisconsin, and a gain of 14.6% in Michigan. So because much of the Midwest as well as the Northeast are not experiencing the big increases of inventory like we're seeing in Sun Belt states as well as Texas and some parts of the West, that's one of the main reasons why we're seeing home prices overall still going up fairly substantially, which I'll share with you guys here in a little bit. And in fact, it says right here, a look at metro level appreciation of home prices mirror these trends. So Camden, New Jersey, Hartford, Connecticut, Syracuse, New York, Worcester, Massachusetts, Newark, New Jersey, Allentown, Pennsylvania, and Rochester, New York are among the 10 fastest appreciation U.S. housing markets so far in 2024 of the top 100 tracked metros. The top 10 also includes 2 California metros, Anaheim, California, where is the home of Disneyland, and also San Jose, California, about 1 hour south of San Francisco. And also rounding out the top 10 is actually in Miami, Florida as well. According to Corelogic's chief economist, she stated the following: home prices increased again this March beyond the typical seasonal uptick, despite mortgage rates reaching this year's high and the affordability crunch continuing to keep many prospective buyers on the sidelines. Even with the long anticipated break in the for sale inventory, in other words, this year was the first time in a couple of years, at least, in which we saw more houses for sale compared to the previous year. So we're seeing inventory growing, which is a positive trend for home buyers. But, because rates and home prices still remain very much elevated, it's still a challenging market for home buyers. So going back here, even though we're seeing the inventory increase, the surging cost of homeownership, further fueled by rising insurance and tax expenses. Some areas that are experiencing big increases of property taxes and insurance are Florida. So go figure why we're seeing inventory surging by 64% there right now. So because of these factors, this is holding potential home buyers or home sales back, as evident in the slow rise in sales compared to last year. These price pressures reflect the overall supply and demand mismatch, as well as continued interest from households with larger budgets. So in regards to that last sentence, that we're seeing households with larger buckets contributing to this interest of houses being for sale, we're seeing exactly that. We're seeing more houses that are selling for over $750,000 compared to the previous year. And because of that, that's one of the reasons why we're seeing the overall U.S. median home sold price increase as well. Now, speaking of a lack of housing affordability, I found this article from the National Association of Realtors, just posted, I think it was yesterday. This just kind of blew my mind because you look at qualifying income. So in order to qualify to buy a median price home today, you would need to earn $100,464 per year in order to buy an average price home in America. It's actually worse in the Northeast, $111,360. But of course, the West, the highest at $155,136 in order to qualify to buy an average price home in the West. In addition to that, housing affordability decreased in all 4 U.S. regions, according to NAR, compared to 1 year ago, as well as the previous month. Compared to 12 months ago, the monthly mortgage payment rose to $2,093 per month from the $1,943 per month, an increase of 7.7% or an extra $150 extra per month. Okay, let's move on and talk about how each of the states fared regarding home price trends from 12 months ago. It says on a national level, home prices again increased by 5.3% this March. No states posted an annual decrease in home prices, so every single state had posted gains year over year. This is much different compared to 1 year ago because back in March 2023 compared to March of 2022, there were these states that posted decreases overall. So Arizona, California, Colorado, Idaho, Montana, Nevada, New York, Oregon, Utah, and Washington all saw home prices decrease year over year. And this is a map right here. Most of the western states have posted decreases, where much of the Sunbelt areas in the South have recorded big increases. In fact, here are the top 10 US states that posted the biggest increases 1 year ago. Again, March 22 compared to March 2023. Vermont leading the nation up by 9.9%. Then we have Indiana, Florida, Maine, and South Carolina rounding out the top 10. Now here's the top 10 states this year compared to 2023. New Jersey up by 12.2%, and New Jersey was actually up only 6.7% 1 year ago. After New Jersey was South Dakota, New Hampshire, all up by over 10%. Then we have Connecticut, Rhode Island, Illinois, Massachusetts, Wisconsin, Maine, and Virginia. So basically the vast majority of these states are all located in the Midwest or the Northeast. Okay, let's now have a look at the top 10 metros to see how they fare, because of course there's some very big differences, and also share how this compares to last year's levels. So let's actually have a look at last year's map. This again is 2022 through 2023. The biggest increase overall was in Miami, Florida, up by nearly 15%. We saw gains, or small gains in these other metros, whereas the western metros were actually falling compared to March of 2022. In fact, the biggest decrease was actually in Las Vegas, down by 3% year over year. Now here's the map this year. Miami increasing by double digits again, up by 10.6 compared to 15%. But much of the western metros are recording big increases right now. So for example, San Diego up by 9%. The previous year, it was down by 1.7%. Las Vegas down by 3%. Now it's up by 7.4. LA is up by 6. Last year, it was down by 1.7. Also, something worth noting as well, we did see small gains in Chicago, Washington, D.C., Boston 1 year ago. Now those gains have actually gone up. Chicago up by 8.2 1 year ago, 3%. DC at 1.2, Boston at 0.8. Now it's up 6% and 7.6% in Boston. So 1 year ago, you basically could cut the US in half, in which the areas in the West were experiencing decreases, whereas the areas in the eastern part of the US were actually going up. And now it's kind of more or less across the board, except for Denver and Houston experiencing the smallest gains right now. And by the way, I'll provide a link in my video description below if you guys want to look at this report. But if you actually right click or just click on this map right here, it takes you to this right here. This is the first time I've seen this. This might be something new they added to this report, but I found it to be really interesting because looking at the metros we're seeing right now, they actually have this MCI, which I actually had to look it up. The MCI analysis, which stands for the Corelogic Market Condition Indicators, categorizes home prices in individual markets as undervalued, at value, or overvalued. In other words, home prices are shouldn't be that high. By comparing home prices to their long-run sustainable levels, which are supported by local market fundamentals such as disposable income. So looking at these 10 select US metros, they believe that the following metros are overvalued. This is Houston, the greater Houston area, Atlanta, Georgia, Phoenix, Mesa, and Scottsdale, Arizona, Dallas and Plano and Irving, Texas, Riverside County, and also in Minneapolis, St. Paul, Minnesota as well, all overvalued according to Corelogic. Does that mean that home prices will decrease in these areas? Hard to say, and I'll definitely keep posted with latest developments on that. Now, speaking of the markets in which they believe home prices will decrease the most over the next 12 months are these 5 metros. So Palm Bay, Melbourne, Florida, a very high probability that home prices will decrease over the next 12 months. And by the way, all these metros is also a very high probability as well. Number 2, the greater Atlanta, Georgia area, Spokane, Washington. Spokane, Washington has been the top 5 for quite some time. I've been making this video for you guys for a couple of years. Spokane, Washington has been in this top 5 for a long time. Anyways, number 4, Daytona Beach, Florida. And then rounding out the top 5, Greenville, Anderson, South Carolina. And with that said, please comment below with your biggest takeaways from today's video. If you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Of course, I appreciate you guys so much for supporting my YouTube channel. Hope you guys have an awesome day and look forward to seeing you on the next video.